You always think about like, what is the exit, strategy, right? Especially when you're kind of the guru, right? You're always kind of worried like, hey, can this survive without me, right? Like,
Right,
that's
right.
one thing when you're building something. And then the thing I realized, Mike, is the beauty of the URL allows for the transition period, right? So, if it was Paul's dividend stocks.com, it's a different ball game, right? Then it's like, well, Paul, we take you out of the equation. Now what, right?
Yeah, right,
So,
right.
but with the beauty of the generic name, right, is you get the ability to transition, which for founders, it's super important, right? When you're thinking about, hey, what URL am I going to buy? When you think about it, you have to always in the back of your mind saying, no matter what your skill set is, how important is it for a future acquirer that's going to say, well, you have to stay with this, otherwise it doesn't make any sense, right? Because the thing is, Mike, when you sell a business, a part of you is lost forever, right? Because it's like your baby is now, you've handed them over the keys. And when you're an entrepreneur like myself, it's something that's never easy to sort of embrace, right? You're used to, being the pilot,
Yeah,
right?
right. I'm
So
sure.
yeah, so that in mind, when you're building out the project, you have to build out with the idea that there's going to be a transition one day. And how do you make it so that it's a seamless one and you can extract yourself from the equation, given the amount of time that you and the buyer kind of negotiate in terms of how long you kind of need to stay on, right?
Right,
In the
right.
case of myself with, my first venture, dividend.com, I stayed on for a year, right? And at that point, it was mid 2013. I was like, I need to kind of go back to my roots of thinking about what's next and what do I want to build. And that's kind of, the thought process. And I still think about that today when I look at, URLs and say, okay, well, if I want to build on this, who are my buyers, right? In terms of the end, the end buyer.
Right, right.
What does my skill set allow, to sort of kind of go into the venture with? And the thing for me, Mike, is I've always needed that technical person, right? So I'm not technical in any way. I'm not a code writer. I'm not someone that's going to easily be able to say, well, I'm going to go in and examine Google Analytics and, the email funnel and whatnot, right? So I was very fortunate. I had the same co-founder for all three ventures.
Oh, nice.
We worked together. Nice. Yeah, we worked together for about 11 years. And it's like a marriage, right? So by the end of the third venture, my partner was at a different part of his life cycle, right? He had two young kids. His wife was a nurse. And there were days where he couldn't get into the office. It's like, hey, Paul, like the babysitter doesn't show up. My wife just worked, the night shift. She's just coming in. I have to stay here. I'm going to watch the kids and this and that. So what happens, and Mike, I'm older, right? So like, I remember those days, right? I remember, being a trader and trading from my computer, holding my, my little infant in my arms,
Right.
and I remember that, right, very clearly. So when he expressed, his sentiment, which was, I need to normalize my life, right? And in his mind, it was about just not having to 24/7 be focused and, sort of focused on like the business and, oh, there's a contact us or someone can't log on and they're having trouble with their password, or this page went down, or, something happened, and when you're on the technical side, it's almost like 24/7 support, right?
You're on call. So, right.
You're on call, right? So like, I got it. The part that was tricky at that point was, okay, we now need to exit out of a business, right? Because at that point, I was waking up at 2:45 every morning here in San Diego to cover the markets. And I was like, geez, I'm sleeping 4 hours a night. Maybe it makes sense for me to transition out along with my co-founder, right?
Right.
So now comes the tricky part, Mike, is okay, we now have to exit out of a business where neither he or I will be on longer term, right?
Right.
So it doesn't put you in the best position in terms of like negotiation leverage. So we had numerous conversations, and then finally we had someone that said, hey, this is really nice, we really like it. We got someone in mind that's kind of take over the role you have, Paul. But it was a little bit like threading a needle, Mike, to find that scenario where you had the buyer that understood it, accepted it, and says, okay, we get it. I mean, there was a mild transition. It's not like, hey, we closed on Monday and we were gone Tuesday.
Right.
It was like, a couple of months of just being in the sort of the weeds with, with the new buyer and what they needed to understand and the process. But that was navigating, a landing, right? Like, and that's another scenario where as a founder, you think about, every exit is always smooth. And, there's, it's a massive win. While this was good, it just shows you that when you're building something, you never know quite what the exit will look like or when it's going to happen, right?
Right.
So in this case, this was a little unexpected, and I needed to make a decision as well to say, hey, what am I going to do here? This is my partner, and I almost can't see myself going on with this without him. So I joined, I decided at that point that, I was going to do the same thing. So it's just something, again, as a founder, you got to think about, when you're taking on a partner, right? It's one of the things that you have to remember. Life happens. You both start out in the same sort of excitement, hey, let's do it again. But then life happens. Right. So how do you navigate through? And it helps to have a really good partner where you can have the communication, say, okay, here's what we need to do, right? Where you both understand each other.
Yeah.
So, so that was, just a couple of years ago. And it was amazing because stocknews.com, which was the third venture, what ended up happening is the people that acquired it from us brought someone in from Zacks, which was, another investment sort of media company. And they built Stock News up even more, and they actually sold it.
Oh, okay.
So they sold it last year to a company called the Tiffin Group, who's out there pretty acquisitive, right? So it's really interesting when I look at these properties and I look at them and they're all thriving. It's as if you're a proud parent, right? It's like,
Oh, sure.
we built these things, we gave birth to them, and now they're still out there. And now look, I actually witnessed stocknews.com getting sold, right? It's like, it's amazing, so that's one of the things that I'm proud of to say is that, the work I've built, right, it still today resonates and is still, impacting investors, right?
Right.
So, that's one of the things where, you look back and say, your body of work, what's it, what will you sort of be known by? So when I think about like new ventures, Mike, I think about that with the same sort of mentality. Can I come in and make an impact in whatever the area is, right? And then what are the remnants of that if something happens and I leave, right? Can these sites survive, right? Because that's the other part that founders sometimes don't think about, right? And I've seen many cases where a founder has gotten the buyer, but within couple of years, the site is just, the business
Yeah.
is just not what it was. And then next thing you know, it's kind of not even working anymore. There's a real thoughtfulness, right, as to how you want to think about even whoever your buyer is going to be, right? Because sometimes, you get so excited, oh, these folks want to come in and buy it. And you think about the money aspect, of course, right? It's like, oh,
Right.
yeah, this is great, but then if the work goes away, it's kind of like, oh, that's not great. You know what I mean?
Right.
Because again, everything you work on, Mike, follows you, right? So, your seeds are planted and it's associated with a lot of different works that you have out there. So there's definitely a thoughtfulness that I think founders need to have, right? In terms of, their businesses, who their acquirers could be, what they'll eventually do with it. But again, like life happens. So
Right.
scenarios are going to be all over the board. But, it's the biggest thing that I tell people, because they're like, man, those URLs are amazing.
Yeah.
It's always the same thing. How'd you get them? Geez, you were lucky. And I'm like, well, no. These were all acquired long after they were first, registered, right?
Right.
So, I made big bets, right?
Yeah.
So, but I tell them the biggest thing that I've seen is the benefit to the biz dev side of the business. When you're emailing, a company, a potential partner, or a joint venture idea, or, contributor, or someone that wants to collaborate, and it's Paul@dividend.com, and you're getting that email, or Paul@mutualfunds.com, or Paul, like, you get legitimacy right off the bat.
Right. Right. Your credibility is
And
built
in a
in, right?
world, yeah. And in a world, Mike, where there's so much communication and much of it is nonsense, right? It's spam. It's, you get it. Like if you're on LinkedIn,
Yeah.
you're going to get, messaged, hey, I just saw that you're, doing this, and it's a spammy pitch
Right.
from a mile away, right? But then if someone sends me an email, and I get it from a legitimate sort of .com, right away, I'm like, okay,
Yeah.
you got my attention,
Right.
right? And biz dev is such a big deal because there's elements of biz dev that sets you up for your exits, right? Here's the best example I could share with you, Mike. So when I was working on, kind of to go back to the first venture, how did it even an exit come about, right? So one day we're sitting in the office, I get an email from a colleague that's running an ETF site, right? So I get an email, he says, hey, Paul, I just wanted to kind of let you know that we just got acquired. So I was like, oh, wow, congratulations. He's like, yeah, it's, kind of came out of nowhere. His company, was raised funds and they're looking to do acquisitions. And oh, by the way, I mentioned you guys. And if you'd like, I'd love to make an intro because I know they're looking for great businesses, right? And I thought of you besides updating you as to what happened. And here's the thing, Mike, that came about because of an outreach that I did maybe a year prior to introduce myself, to this person.
Wow. Yeah.
And so them getting acquired led to the introduction between me and whoever, and the company that actually ended up buying us.
Right. That's amazing.
But all that stems from the biz dev side, right? From being able to reach out to folks and get on their radar and say, hey, we're running dividend.com. It's, rating system and this and that. And is there a way to work together? I know you're doing ETFs, and maybe we could do something where, I send an email out to my list and you can send one out to your list and whatnot. And, if you have really good rapport with folks, right, that always puts you in a position for potential benefits that you never see coming.
Right.
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 So that's the other beauty of, again, having a great URL is the biz dev side opens up the avenue to, again, being on radars of so many different folks, right?
Yeah.
So that's another concept, right? That's really, really important. When you think about, do I want to invest in a domain, right? Like, do I
Right.
want to spend dollars, right? Today, we're seeing we see a lot of startups, they're raising a big round. They're transitioning from their .io and they buy the .com and whatnot. And you see those stories almost on a daily basis, right?
Right.
So, I still, for myself, I'm a domainer. In that sense, I still get the excitement. It's like, it's almost like, sports memorabilia, sports collecting, things like that, right?
Yeah.
You get that excitement, when all of a sudden, like, something's happening, you're like, hey, I like that trend that's going on. I wonder are there URLs in that area? And then all of a sudden you're like, oh my God, like there's an exact match for like this thing that's happening. And do I want to roll the dice? Do I want to have exposure there? Right. It's kind of like this odd joy, right, that you have, even though you're spending money, of course, right? But I think I've heard it recently where someone says, domain names are like the original NFTs, the original one of ones, right?
Right.
And I kind of love that, right? I kind of love that, but I just think that there's so much you can do with a great URL, right?
Yeah, absolutely.
No one knew who I was before I launched, dividend.com. I was a trader, Mike. I was trading my own capital. I didn't have the Wall Street background, and I didn't come from Goldman Sachs or whatever. And then I jumped into doing this. I saw an opportunity. The timing was right. I said, hey, I think I could build a rating system for dividend stocks. And I thought about what that formula, would look like.
Right.
Because there were dividend sites out prior, right? Prior to the dividend.com launch. I just wanted to go above and beyond in the offering with an amazing URL. And I think that's the other thing that I'd say is important, is that getting a great URL is the beginning of the battle, right? The other part is, okay, can you do more with that URL than what's already existing out there? And what's different, right?
Right.
Because that's the other trap sometimes that a domain investor or someone that is into domains feels like, if I just buy this and I put up something that's almost as good as what's out there, I'm going to win, right? But that's not the case, right? Like, the case is, can you make it that much more better, right? Can you deliver on something that's so value added that, you then surpass, the existing competition or folks that were out there, right? So that's the other thing, is, when you get excited, when you see like a URL, like, hey, I think that'd be an amazing asset, to own. You always have to think about it and say, okay, if I develop it, what can I do with it? Right. Can I do something that's a little bit different, or am I just mimicking what's out there? The thought was, at the time, there was, when you thought about mutual funds, who's out there? Morningstar. So while that's a very big company to sort of pick a fight with, the one thing that I did in terms of research is I said, okay, could there be another type of rating system that would exist? So that was my rationale. If I wanted to buy this, could I build a rating system that could give mutual fund companies an alternative to the Morningstar only? Basically, there's a, how years ago they'd say, Microsoft is, it's anti-competitive. There's, they're dominating Windows, right?
Right.
Morningstar, for mutual funds is pretty much the same ball game back in those days, right? It's like they're, and there still are, today they dominate, right? You see it as part of like a company's advertising. And the one thing that I did is I talked to some of the mutual fund managers and I said, what are your thoughts on, like, Morningstar in the ratings. And for the big companies, they loved it. For the smaller companies, they struggled, right? Because it was like, man, we can't get on their radar, like, and we just can't get the coverage like the big players do. And so I started thinking like, well, if there's another rating system, perhaps that could potentially work, right? So that was the idea of going in and acquiring, acquiring that asset. So, okay, maybe I'll build something like that. I acquired it. And then as I start to work on it, I talked to the company that acquired my dividend.com business, and they were interested. They're like, hey, let's do this together. We'll acquire the asset, and I'll work as part of that. And we started going down that road, and then their vision changed for
Okay.
what it was. So this was another lesson learned, Mike, in terms of sometimes you don't, when you give up the keys, you also give up the ability to navigate,
Right.
the vision, right? So I guess in their mind, they didn't want to go down that road. Although I think at first they were excited, they ended up changing, their sort of their thought process. They wanted to be more of a, kind of more of a Investopedia, like, data and whatnot. And at that point, I couldn't do anything anymore because I already had done the deal, right? So
Okay.
for me, it was a little bit, I was like, I was kind of, a bit of a downer, right? Because I was all excited about having the resources of this company to be able to push down this road and go take on, big player. So when they decided that, that wasn't eventually going to be, their route, it changed the course of everything for me, right? And at that point, I was a little bit like, I'm not buying the other, I'm not buying the other direction. So at this point, it doesn't make sense for me to kind of keep going down this road.
Right.
Right. So, and that was kind of one of the things where it was what it was, and that's the other thing. And again, Mike, and you learn sometimes, when you're doing some sort of joint venture or you do an acquisition and you agree on a road, you always have to be ready that the acquirer could always change the menu at any time. Right. And for whatever it was, that was their, that was their thoughts. So I never got to have that battle, right? I saw the opportunity, I thought it was going to happen, and it was what it was. You know how, when you hear about couples splitting up, or teams and athletes splitting,
Right.
what's the term? Irreconcilable differences.
Right.
Yeah, you just, we had different visions.
Right.
And at that point, again, I didn't have the keys anymore.
Right. Yeah. So
Again, we went
you
through an
didn't have the control,
acquisition.
really, right?
Yeah, you
Right.
don't have it, right? So, that was one of the, that happens. And
Right.
that, so I've seen all different sort of scenarios, Mike, in terms of like when you're building. As you get older, you are much more prepared for the inevitability of the unknown, right? It's never easy to sort of go through it, but it happens,
Right.
right? So I know in the world that exists today, everyone seems to think that that every ending is always 100%. It's not. If anything, that's probably rare.
Right. Yeah.
You
Sure.
know what I mean? There's
Sure.
always a little bit of a, I always look at it like this too, Mike. Whenever I hear about startups getting acquired that I've followed, and anytime they use the term for an undisclosed amount, me as an angel investor, and I've done many angel investments, I can tell you, it's on paper, it didn't work out so well. So a lot of times when you hear about companies getting acquired, but they don't release the number,
Yeah.
you could almost bet that it wasn't a great outcome
Yeah.
for the investors and maybe even some of the team.
Interesting. Yeah.
People don't like to share these, sentiments, but I've probably done over 80 angel investments.
Okay.
And I've been on the side of getting the email updates saying, hey, great news. We just got acquired. And then I saw I would see sort of, the residual, the residuals of it and say, well, it's being celebrated publicly, but me as an investor, this wasn't good.
Yeah. Yeah.
So there's a lot of oddball stuff that happens, right? So I just think at the end of the day, truth, transparency, get older, you get wiser.
Sure.
And you just want to digest things a little bit with a more open and realistic mind, right? So, in a world where everyone's shilling and hyping and, promoting, there's a lot of reality checks that happen there, right? So, so it's interesting, there's a lot of, so I've been on both sides, right? Starting companies, I've been an angel investor, I've had some good exits, and then I've had exits that are celebrated publicly, but as an investor, it's like, this was not a terrible, this wasn't a good outcome. But what are you going to do, right? Like, that's the world. I think the angel investor path is good, but it's a small part of my approach, right? So when I'm making bets, I'm usually making smaller bets now, right? Unless something feels really unbelievable, right? I'm usually just making smaller bets if I want to get exposure there. The biggest outcome, the biggest ROI is always building your own business, right? So I would tell that to anyone. Betting on yourself and your own energy to sort of take a project from zero, to something big is the best bet you could ever make. You play with your back against the wall most of the time. You don't look at the clock. You're excited, when you get up because you're thinking about, in a sense, it's uncapped.
Right.
The more the effort, the more the potential is in terms of the ROI, right? So that to me is still in my wheelhouse of what I'm thinking, right? And that said, Mike, what's very interesting is I've had some conversations about maybe getting back into the investment fray in terms of building out there. And there's other areas too that interest me from just having interest, right? So I've had conversation where I was actually even approached to talk about doing something with like an agency style, right? Where I love domains. They're like, man, Paul, you would be great to do something with domain names, help companies or work on deals or whatever. So I've actually had conversations about that because I love domains so much, right? I have conversations about getting back in the investment space, right? Which, oh, by the way, Mike, I own some pretty wild URLs. Just when you think, there aren't like other big ones. So I own bearish.com.
Oh, wow. Okay.
Yeah. So I own bearish.com. I own cryptoratings.com.
Oh, nice.
I own stockratings.com. And a bunch of others. I've had some conversations with some folks about it. Again, I don't want to build anything myself anymore where it's just want me and just like, I would want to maybe bring these assets in-house where I know there's resources, but where I know the vision is aligned completely, right?
Yeah.
And then there's a big wins for both sides, right?
Yeah.
So I have those. I have some other like crazy URLs in other areas, right? So, I own sportsagent.com and sportsagents.com. I own Endorsement Deal and endorsementdeals.com.
Oh, wow. Great.
So, I'm a huge sports fan, Mike. So like, there's always been this wild little fantasy of mine is like, boy, could I ever do anything in the sports space? Right. So, I have those URLs and those are amazing. Right.
Yeah.
When you think about Endorsement Deal too, what I love about them, having the singular and the plural is very rare. Right.
Yeah.
So
True.
in both cases, I have the singular and the plural. Right. So, and I think about what's going on with like in college sports today, names, images, and licensing, right?
Mhm.
NIL. There's a lot of money happening there. And I'm a sports guy. But what's great about Endorsement Deal and endorsement deals is that they're agnostic, right? So it's not just like, hey, maybe we build an agency and work with athletes. It's not even just athletes. When you have a URL like that, it's agnostic, right? It could be athletes, it could be influencers, it could be celebrities, it could be
Exactly.
musicians, right?
Yep.
They're all doing deals,
Yeah.
right? So that's but again, that's not an area that I've ever specialized in, right? I'm almost like a fanboy of those areas, right? It's
Yeah.
like, I love music, I love sports, I love what's going on in the influencer space, right? But can I deliver something big there? I put my biz dev hat on, but I also know that besides the URL, what am I bringing to the table? Right. So that's the other tricky part when you're talking about like finding the right fit is if this is their focus, well, what's your role going to be? Like,
Right.
what do I bring besides these assets? Right. And I think that's part of the whole, approach. You bring positivity, you bring optimism, you bring confidence, you bring energy, right? Like that's what you want, right? At the end of the day, you want someone that has a strategic mindset, and but that's what also gets me excited about this whole agency idea. When someone says, "Oh, Paul, because I have like several hundred URLs that I could start out with my own inventory, saying, hey, I could start out with these. I own a bunch of other great ones. When you think about Web3 and everything happening there, I own walletaddress.com. I own walletsecurity.com. So I'm always intrigued because I love talking business, right? I love the whole idea about strategizing. How big can this be? What's the TAM of this, right? And I think that's the thing where, and I know a lot of domain brokers, right? And there's a lot of great folks out there. But the one thing that, my experience is a little bit unique, right? Is I've been on the operator side. Right. So it's very intriguing, to me when I think about, the conversation, would an agency work? And maybe it's even an agency that goes beyond just, URLs, right? There could be other asset classes. A lot of the best deals, Mike, a lot of times get done. I see this in the sports card space, right? I love sports, memorabilia, sports cards. Some of the best deals aren't done on eBay, right? They're not even done on auction homes. They're done private sales. Because the buyer and the seller want a degree of confidentiality, right? They're not interested in like, hey, I want to be advertised that, I moved this item and the buyer doesn't want to be exposed and worry about like, hey, now people know I own this asset and there's a security risk or whatever.
Right.
So I think there's a level of privacy in terms of deals that I think we're going to see more of, while we do see, a lot of URL deals get advertised or whatever, but I think there's other asset classes where things are going to get moved. You'll hear that they've gotten moved, but you'll never know the price or the buyer or the seller.
Right.
And that's something that's very interesting. And I think about that too, from a URL standpoint. I own multisignature.com when I think about like a platform, where deals get done, right? I own confidentiality.com.
Oh, nice.
Right. So when you think about like privacy, right, like there's that aspect.
Yes.
So Mike, I think there's a lot of opportunities. And absolutely. I think for me is finding the right folks that have this sort of the same mindset of let's go do it.
Right.
Let's do this. Here's what I can deliver. And let's just go and do it.
Yeah.
Right. So I'd say that I've had a lot of dates. I've been dating, right? Where people are intrigued and we chat for a while and we talk about, and I look at the intensity, the excitement level. Does it subdue, do people kind of, because what happens with entrepreneurship? Everyone's excited and then they slowly
fizzles out, right? Yeah.
Fizzles out, right? So when you want to find that right spouse, right? Or that right co-founder or that right team to work with,
right?
Those are the elements you need to see, right? So you don't just one phone call, you're forming an LLC the next morning. You can't do it that way, right? You have to build a rapport and a bond. And you kind of almost, the way I look at it is, let's put a Google Doc, together and let's start sharing ideas and let's see where that goes, right? Let's see where that goes, right? So there are a lot of things you can do prior to formalizing, where it's like, okay, now let's do it, right? Because what you don't want to do is you don't want to jump into an LLC and then next, you realize, I can't really get along with this person, or they're not as hungry as me. They're not as hungry, or, now all of a sudden I can't even get them on email. Like they're slow to respond. I'm like, that's not the same person prior to. So you really have to build a rapport to find those right fits, because it's not easy. But I do believe that building with someone or a small team gives you the energy that you need every day, right? And I think that's part of the element. Being a solo founder, yes, you're complete, control, but it also you don't have the sort of when you need to vent, you don't have that, that support system, right? Or people that are in the trenches with you. That's a big deal. Like when someone says, hey, I'm willing to sacrifice my next few years and do nothing else but this with you, that's what you're looking for. The part that scares most people is the content side of everything. Whether it's doing a TikTok, writing a post on LinkedIn, writing a piece on a newsletter, content scares mostly everyone.
Sure.
And that's the thing that you have to make sure that that's part of your strategy in anything you do. Content is the core of it. Besides the great URL, you have to have a content strategy. And that person that you're working with or the team has to also understand that is important.
Right.
Otherwise, who's going to find you, Mike?
Yeah.
Who's going to find you? Like if you're not doing these videos or whatever, and you kind of just like, hey, got a URL, but I'm just sitting on it, right? You're doing these videos, that's part of it, right? Like it's part of this, the content game. And I think for most people, they get scared because they worry like, well, do I want to write a post or another post and then I have to do it again tomorrow? They get really afraid of it.
Right.
But if you embrace that part of the strategy, then that's to me a difference maker.
Yeah, it makes sense.
And that's one of the things that I always push on is like, do you believe that with this venture that we're talking about, content is the core? If so, we have to develop our content strategy and we have to deliver on this consistently, right? Each day. So so that's kind of, Mike, that's kind of where I'm at in terms of there's a lot of things that I'm thinking about. And, I'm super excited to, chat with anyone, right, about, these opportunities. And like I said, a lot of these URLs that I have will point to my LinkedIn, right? I haven't even developed a landing page. So if you type in sportsagent.com, it's going to go to my LinkedIn page. And I've had outreach that way, right? But again, it's a lot of times it's stop and go. Someone gets excited for, a minute.
Yeah.
They're like, hey, love to talk to you about it. And then you realize it's not kind of what what you thought it might be, right? So,
right.
but it's going to be interesting to see how things fall, right? Because every day I'm having conversations. I haven't formalized anything to say, hey, we're about to launch this,
Right.
but but I'm having conversations in these areas. That's ultimately, it becomes a bandwidth, thing where
Right.
if I want to do this, but yet a part of me wants to do this agency too, because I love domains that much. Can I give enough bandwidth where the value add doesn't scare anyone I'm working with?
Right.
Because you have to be fair, right? If someone's going all in with you, they expect the same.
Right. Right.
Right. So what's an interesting aspect for me, and I see kind of with the best example is Gary Vaynerchuk. And most people know who he is, right?
Yeah.
Gary V.
Yeah.
I haven't seen anyone put himself out there as much as he has and is involved in so many ventures. Yet, what I've learned in following Gary is that everything ties together. So that makes his partners feel really good, because if Gary's dedicating part of his energy to his NFT project, which then circles back to his restaurant joint venture deal.
Right.
So I kind of think about what he's created, which is it's an anomaly in a world where people tell you do one thing and one thing only. What I think he's done is he's created a model where if you have a lot of energy and you're really quick on your feet and you could think, there's the potential that you can do more than one thing.
Yeah.
And I think in my mind, that's what I'm thinking about. Could I fulfill these desires, these entrepreneurial, desires, and yet make it so that if I do more than one thing, I'm not taking away from any of it. So if I'm being known on bearish.com for building something amazing, that's not, dark or, whatever. When you think about bearish, you're thinking, oh, it's going to be dark or, whatever. It's not, right? The idea for even bearish.com was like bulls with questions, right? It's like, we're all bulls, but we're all we all have questions, right? Like it's almost like building an early warning system for investors. When things are getting too frothy, flashing yellow light, be careful, right? So the idea is if you're putting out good work, you'll be in a place that whatever venture you get involved with, your persona would add value, right? Which, again, look at what Gary V's created. He's involved in numerous ventures where someone would say, on paper, that makes no sense. He should be doing one thing and one thing only, right?
Right.
But in a world with social media and exposure and content, which he understands as well as anyone,
right,
that's the template, Mike, where I think about. And I think about, like, with these URLs, could I potentially put myself in a position where bandwidth wise, my kids are older now, right? So I'm not in that, I coached baseball, I did all those things, but now I'm in a different part of my life where I could do some damage. I'm much wiser than I was back 20 years ago, right?
Right.
So there's a lot of like excitement around what could happen, but I still want to make sure that I'm doing it with the right people and the right team.
Sure. Yeah.
Because at the end of the day, if you don't pick the right team around you, that circle, if that circle isn't right, doesn't matter the URL you have.